How big is Danantara really? Can it push Indonesia's growth above 5%? Indonesia's sovereign wealth fund Danantara has been described as potentially managing more than $900 billion in assets based on consolidation of state-owned enterprises. If interpreted literally, this would make Danantara one of the largest sovereign wealth funds in the world. But an important question remains. Does this number represent actual investment capital, or simply the total assets of state-owned companies connected to the fund? Indonesia's four largest state-owned banks, Riil, Mandiri, BNI, and BTN hold roughly $580 billion in total assets. But most of those assets actually belong to depositors. What shareholders truly own is bank equity. Combined equity of these banks is around $74 billion to $86 billion. The government's effective ownership value is roughly $60 billion to $70 billion based on market value. Now consider major non-bank state-owned enterprises. Telkom Indonesia alone has assets of roughly $17 billion to $18 billion. But because the government owns about 52%, the state's economic ownership is closer to $9 billion to $10 billion. Similar logic applies to other large SOEs, such as Pertamina, PLN, Mining Holding Mind ID, and even Garuda Indonesia, where the government owns roughly 64% after restructuring. Again, the relevant number is not total company assets, but the value of ownership. If we estimate consistently using market value of government ownership, Danantara's effective investment portfolio is roughly around $250 billion to $300 billion. That is still very large, but it is far smaller than the $900 billion or $1 trillion headline figure. Compared with other sovereign wealth funds, Danantara would still be significant, but it would not yet be among the largest global funds. Indonesia's GDP is roughly $1.5 trillion. If Danantara manages around $250 billion to $300 billion, that equals roughly 17% to 20% of GDP. For comparison, Norway's sovereign wealth fund exceeds 300% of its GDP. Singapore's sovereign funds together approach 200% to 300% of GDP. Indonesia already grows around 5% per year. To push growth significantly higher, the economy requires large and sustained investment. Even if Danantara deploys $17 billion to $21 billion, that equal to 7% of ROA per year, its direct impact alone may not dramatically transform national growth. In addition, several major state-owned enterprises, such as Plin, and to some extent Telkom and Garuda, also operate with strong public service mandates. This means part of their capital is used to support national infrastructure and connectivity rather than purely maximizing profit. Because of this structure, what ultimately matters is how the fund leverages capital and attracts additional investment, allowing commercial projects and external co-investment to compensate for sectors where returns are structurally lower. Danantara has several strategies to expand its investment capacity beyond government injections or retained earnings. First, co-investment with global sovereign wealth funds. Second, attracting foreign institutional capital. Third, using project financing and leverage. Fourth, asset recycling and monetization. And fifth, developing Indonesia's domestic capital markets. These strategies can significantly multiply the effective investment capacity of the fund. The real strength of a sovereign wealth fund is not only the size of its assets, it is the ability to mobilize capital at scale. If managed well, Danantara could become an important catalyst for Indonesia's economic transformation. But success will depend on three things: governance, investment discipline, and global partnerships.